Good morning, guys. Listen, welcome to your market report for this. Today is Tuesday, June 26, 2018. And listen, I'm glad to have you guys here. Now, we're going to open the charts right here. We'll close the charts down a little bit. The first thing we're going to look at is silver price today. Very volatile. Now, what we notice here is they tried to suppress the price of silver this morning. Where's the bottom to my chart? There it is. Okay, they tried to suppress the price of silver this morning, and they knocked it down. They smashed it down, and it was already low. It was already like 1626 or 1627, and they knocked it all the way down to almost 1610. And it's springing right back in their face like a recoiled spring. It's right back up to where they first started to knock it down right now. And it's just the energy that's in silver. This is why silver is such a good buy right now, is because they've got it down at like mining production costs. People keep forgetting that this is a non-renewable resource of the earth, a non-renewable resource. And when it's gone, it's gone. And they're digging it out of the ground as fast as they can, and they're using it for everything you can think possible. And they're finding new uses for it every day, and there's a limited amount in the ground. But there's an unlimited amount of paper silver. So what's going to end up happening in the end is very obvious, that the paper silver price and the real physical silver price are going to tear apart. They're going in the end, ultimately, they're going to tear apart. It's entirely possible that the paper silver price will actually be still going down or staying cheap, while the real physical price shoots to the moon. So that's going to tear apart. Either that or the paper price is going to follow the physical price upwards. One of the two. But this won't last much longer because it's getting more and more pressure on it. You can see the effect of this pressure when they smack it down, and it bounces right back up again like that. So now let's move on to Bitcoin today. Bitcoin's having a hard time of it. It's in the bottom-making process right now, and what we're looking at right now is the quickest chart of them all, the 1 minute. And so this is happening minute by minute right now as we're watching it. It started to take a little dive there just a couple minutes ago, and it seems like it's starting to recover a little bit now. It's barely hanging on to try to hang on to 61.85. It's trying to crash right now. Right now, while we're speaking, it's trying to crash. So what we're going to do is we're just going to watch this for a few seconds, and then we might come back to it and see what it's doing in a minute. Let's take a look at cryptocurrency market capitalizations while we're waiting. And what we see is Bitcoin dominance at 42%. Bitcoin is running strong with the dominance. $253 billion in market cap. Some of these coins look like pretty good buys. Let's see if we can find the real good buys here. The good buys are the ones that are down the most. There's nothing really that's down that much today. Ethereum's the only one that's down with any significance, 2.24% at $451. So probably Ethereum's probably the best buy today because it's down the most. Tron is down too at 2.78%. As far as Litecoin is concerned, it's only down marginally, and EOS is almost down nothing at all at $8.13. So let's move on to the Dow Jones today. Dow Jones is pretty much even with the board right now while we speak. It's moving sideways. It's up 3.92 points, 0.2%, which is nothing. It started earlier today with a little bit more of a bounce up than that, but it's leveled off. I think it's probably going to end the day down a little bit. That's entirely possible, but the floor right now on the market is probably 23,000. And why I say the floor under the market is going to find support around 23,000. And it's been going between 23,000 and say 26,000 for quite a while now. So now let's take a look at sweet light crude oil. Sweet light crude oil is $68.41. What we're seeing is on the day, we're seeing it, we're seeing a little bit of an upswing again, an uptick. It's getting up near $70. I'll tell you what I think. I think it's pretty much going sideways right now for a little bit. Now, the markets have been going sideways for a little bit. And the reason why is because of the bond market. Now, the bond market's getting ready to make its move. It's getting ready to pounce. Yields are getting ready to rise. I'm expecting yields to rise probably, I'll be very specific when I'm expecting it, around the 5th of this month coming. So it's only a couple more days. We're almost at the end of the month. We're at the 26th of June, around the 5th of July. I'm expecting them to start rising, and I'm expecting them to start rising during the whole rest of the month of July. I can see this U.S. 10-year surpassing 3.1% before the end of July. And I mean, I'm being very specific here. I'm putting my neck on the line that about this, that we're going to get this rise in the bond yields all during the month of July. And I'm going to tell you specifically why I'm expecting this. Because the Fed is raising the end of this month to $40 billion a month of their quantitative tightening. And this should start the bond yields starting to go in the opposite direction again from what they have been going. There must have been significant selling of bonds. Well, I know there has been. Like the money yesterday that moved out of the stock market moved in, probably a lot of it into bonds. Bonds have been on sale, and the reason why is money's chasing yield. The highest yield is in the bond market. Because bond prices went up. The U.S. 10-year went up to 3.1%, exceeded 3.1%. The stock market yield on average is only around, I think it's 2.6 or 2.7 or something like that. And you get bond yields at 3.1. Yeah, I mean, it's better yield. It's over 3%, and the stock market's not yielding in the 2% range. So they're chasing yield. They're going after the bonds, and they consider them also to add icing to the cake. The bonds are considered to be the world's safest asset, the most reliable, most safest place to possibly put your money. It's considered to be your better than gold. When I even say that, I mean, when I say that, it's crazyville to talk about it that way when the United States is actually over $20 trillion in debt and over $100 trillion in unfunded liabilities, and to say it's safer than gold. I mean, come on. I mean, we're talking about a bankrupt entity, and they're saying it's safer than gold. But this is the way they consider it. They consider it to be the safest of the safe haven assets. Why they consider it to be the safest of the safe haven assets is because they realize the United States' ability to print money and that they can never go bankrupt. But what does that mean on the other end? It means that if they do that, the money that they're printing is going to become worthless if they don't go bankrupt. So they're facing only one of two choices. Either you go into bankruptcy, right? Or you print your way out of this mess. And if you print your way out of this mess, you've just basically destroyed the purchasing power of the dollar. So those bonds, even though that they're not going to default on them, officially default on them, still they're going to become totally worthless. So now let's move on to the U.S. dollar index at 94.49. So the dollar's been riding pretty high and pretty strong. And the reason why is because the Fed is selling off their toxic balance sheet in this quantitative tightening. And they haven't stopped this policy. And because they've been getting away with it up till now, the market has to look at it and say to themselves, the Fed is actually doing it. And until it's proven otherwise that the Fed cannot do this, until it's proven that the Fed can't. It would be kind of like a really fat woman, a 400-pound woman, saying, "I'm going to ride that horse up the hill." And say they all get her up on top of that horse, you know, say a dozen men, it takes them to get her up on top of that horse, and they got her successfully sitting up on top of that horse, and this horse starts to trot really slowly, 1 foot to a time, up the side of the hill. Everybody's watching and saying, well, maybe she can do it. Well, we all know that as soon as she starts to go up, she's going to fall off. And that's what's going to happen with the Fed. The Fed is, I can do this, and they're doing it. And for the first little bit, they're doing it. And they still haven't been proven that they cannot do it until they fall off, until the whole thing, the shit hits the fan and everything falls to pieces on them. And that's when it's going to be proven that they can't do it. And that's when we're going to see everything start to change. And what's going to prove that they can't do it is the fact that the bond market's going to explode. I mean, the yields are going to explode here at a certain point. I can't tell you exactly when. It surprises me that we found this many buyers in the bond market to suppress these yields up till now. I thought the yields would be hitting 3.25% by now. It surprises me, but believe me, they're going to, because at the end of this month, they're increasing the amount of their quantitative tightening. So they're putting more pressure on it. They're going to tighten up the thumb screws at the end of this month. Deutsche Bank, what are they doing this morning? Well, I'll tell you what Deutsche Bank's doing. Deutsche Bank right this second, if we take a look at the charts. Now, this is not the normal chart I show for Deutsche Bank. This chart is on the New York Stock Exchange, Deutsche Bank, and it's priced in dollars. This is why it looks a little bit higher. The other chart I show you is priced in euros, and the dollar is not worth quite as much as the euro. Now, if we see what's happening here, we see that the price did rise, and this was all those Qatari buyers and those Arab buyers and stuff, and they brought the price up to $20.46 when it was down on a low of about $12.75. What we see now is a precipitous drop-off in the price, and it's still dropping at $10.86 right this morning. It's down 3 cents a day, but it's a slow drop. Not really all that slow a drop. But this chart, if you overlaid it with these other big drops in banks that went under, like Lehman Brothers and stuff, you're going to find that this whole thing is set up to continue to crash. I can't see anything saving them now at this point, Deutsche Bank. I think Deutsche Bank's on their way going down, and I don't think they're going to be saved. I don't think anybody's going to step in to rescue this bank. And they got a huge derivative book. This could add to the world's chaos when this occurs. This and things like Illinois. So listen, thank you guys for listening to my market report for this morning, and we will catch you on the next show, probably tomorrow. Bye-bye for now, guys.